Welcome to This Explainer. For years, it felt like the entire automotive industry was singing just one unified tune. And that tune was electric. It was the undeniable future. But recently, that narrative has shifted completely. Today, we're unpacking a fascinating piece called Sparking Out, the collapse of the electric vehicle dream. We're going to strip away all those flashy marketing campaigns and look squarely at the structural foundations of the EV market to figure out what is actually happening beneath the surface.
And honestly, the stakes of what we're looking at today are perfectly captured by this jarring quote from the source. They promised a green utopia, but they delivered a billion-dollar graveyard of uncharged cars. Wow, that really sets the scene, doesn't it? We aren't just talking about a couple of companies missing their quarterly earnings reports here. We are looking at a massive, global shift in how we travel that might literally be hitting a structural brick wall. It absolutely forces us to question the gap between the grand vision we were sold and the concrete reality we're dealing with right now.
Okay, let's dive into this. On one hand, we were sold this expectation of a booming green utopia, right? Seamless travel on pristine highways, clean energy effortlessly powering our daily commutes, the whole 9 yards. But the reality that's actually taking shape on the ground is way harsher. It's a landscape of uncharged cars and severe infrastructure struggles that are leaving everyday consumers feeling totally stranded. Those massive sky-high promises made by a super enthusiastic industry are now crashing headfirst into some incredibly tough truths.
Section 1. The EV Gold Rush. So to really understand how we got to this stark contrast, we have to rewind to the very beginning of the boom. The EV gold rush was, it was chaotic. It was a period characterized by startups that were just massively, almost unbelievably overvalued. Imagine the absolute frenzy of it all. Companies with literally nothing more than a crude prototype and a really slick PowerPoint presentation were making impossibly grand promises. And it worked. They secured unprecedented amounts of investment. The pacing was just frantic. Cash was flowing absolutely everywhere, because investors were absolutely terrified of missing out on the next big tech revolution. But because of that FOMO, we got a landscape built on some incredibly misleading claims. It was a sheer race to the top, completely fueled by speculation.
Section 2. Bursting the startup bubble. But as we all know, those dizzying highs of a gold rush just can't last forever. Rapid expansion without a rock-solid foundation eventually meets gravity, which brings us to a really sudden, sobering market stagnation. Let's take a look at those archetypal companies that the media love to call the Tesla killers. These startups generated unbelievable buzz. They had extreme overvaluations before a single viable car ever rolled off an assembly line. They were built almost entirely on hype, selling investors a lifestyle and a dream. But ultimately, when it came time to actually do the hard work, mass-producing complex, safe vehicles at scale, the hype evaporated. And that left a whole lot of these companies facing sheer bankruptcy. And this brilliantly illustrates the sheer scale of the fallout. $1 billion, a billion-dollar graveyard. We are not talking about a few thousand or even a few $1,000,000 lost in some bad stock trades. We are talking about billions of dollars in capital, raw resources, and human labor completely wiped out. It's a colossal financial crater left behind by companies that promised they were going to revolutionize the world, but ultimately failed to deliver a functional product to the everyday consumer. Section 3. The Infrastructure Lie. Now, the collapse of those startups is really only half the story. If we shift our focus away from Wall Street valuations and look directly at your everyday reality, here is the huge physical roadblock we're facing. Building millions of cars simply didn't align with building the places to actually charge them. This is absolutely crucial. Automakers were heavily incentivized to push as many shiny new vehicles to the market as humanly possible, but there was absolutely no synchronized effort to ensure the real world was ready to plug them all in. So consumers bought into that green utopia we talked about, only to find themselves incredibly anxious about taking their brand new EV on a simple weekend road trip. Why? Because the charging network is fragmented, it's often broken, or in a lot of places, it's just completely non-existent. Look at the massive, glaring disconnect here. The sheer volume of electric vehicles produced is sky high, right? But it is met with this disproportionately low, almost non-existent availability of charging infrastructure. We are looking at a logistical failure of epic proportions. Talk about putting the cart before the horse. The industry successfully manufactured the demand, and they manufactured the product, but they fundamentally failed to manufacture the ecosystem required to actually keep those products moving.
Section 4. The Lithium Reality.
So we've talked about the financial cost, and we've talked about the logistical cost. But now we really need to examine the hidden material costs of the vehicles themselves. Let's move to Almir and see how this builds the true picture of an EV's lifespan by deconstructing the global lithium supply chain. It's kind of a wake-up call. Step 1 is heavy raw earth extraction. It is a gritty, dirty process. Step 2 involves complex global transportation. We're talking about moving these raw materials across entire oceans using massive fossil fuel-powered logistics networks. And then step 3 is the incredibly resource-heavy battery manufacturing process itself. When you break it down logically like this, step by step, you start to see a very, very different picture of what it actually takes to put a shiny new electric vehicle into a showroom.
And that's the rub, isn't it? The pristine, ultra-clean green messaging used by the industry stands in intense, almost shocking contrast to the brutal, resource-heavy global foundation of battery production. The mining, the complex chemical processing, the global shipping, it is an incredibly heavy industrial process. And that reality completely challenges the utopian, eco-friendly marketing that fueled the whole EV gold rush in the first place.
So, what does this all mean for us? We arrive at the ultimate question. After the frenzied gold rush of endless capital, after the catastrophic collapse of all those overvalued startups, and after uncovering the big infrastructure lie and the heavy industrial reality of lithium mining, what is actually going to power the future of your driveway? Will the auto industry be able to pivot and solve these massive structural issues? Or is the electric dream truly sparking out? It's a lot to think about. Keep questioning the narratives, always look at the data, and we'll see you next time.